All right, so when it comes to trading, people have all types of strategies that they actually use. Some can be more complex, some more simple than others. And that's what I'm going to really show you today is a very easy way of going about using one strategy. Yes, something that doesn't take a lot of thought into doing it, but you need to master one thing, which I always say, that is market structure. If you are struggling understanding or reading market structure, you may want to become an elite channel supporter and gain access to a great video that I cover surrounding market structure, breaking it down. But you also receive tons and tons of trade breakdown videos that have helped so many people out. Why are those videos so important? Because that's where I break down the same trades that I post over on our Discord community. I break them down as if you're sitting right next to me, and I walk you through these setups. There's tons of those videos, and they help you out so that you can look for similar setups just like that and find trades on your own using this one strategy, okay? It's all surrounding multi-chart confluence or using paired charts from the same contract or instrument you trade. For me, like for example, this is the NASDAQ. I trade using my higher base chart 120 range. And then I basically scale down and look to see if I can find confluence on a lower base chart. Say, for example, an entry chart in which I can trade from. Now, I will be showing you that here in a minute, but let's say you're interested in making $500 a day. All right. Some of you probably like, wow, is that possible? Yes, that's going to be $2,500 a week. Now, I always tell people, take 1 to 2 quality setups a day, and that's really all you need. Now, we're talking about the emini futures. It will take a little bit more to trade the micros that way, unless you have capital, to where you can trade multiple contracts, on the micros. Okay. Now, trading the emini futures is, fairly easy to do. Just taking one good setup, scalping for like 20 points at a time. That's really all you need. All right. If you break that down, 20 points, there's 4 ticks in every point. That's 80 ticks on one solid trade. Okay. If you're trading 2 contracts, then, you make yourself $800 a day. Now, making just $500 a day is a lot easier, is even easier, okay? So, the strategy works like this. Figure out the structure of the market. And again, before we get started right quick, I just want to say this. If you're interested in becoming an elite channel supporter, the link is down in the description portion of the video. It's only $6.99 a month. That's all it is. That breaks down to be like 24 or 25 cents on the day, okay? Some of you probably spend way more than that on price a cup of coffee a day. By becoming a member, you're only spending $6.99 a month, okay? And it could be something that changes the way that you trade going forward simply by understanding, first and foremost, the trade breakdowns, okay? Then the video playlist you can run through and watch those videos. But mastering and understanding that piece about structure, that is the centerpiece, the most important element or concept that you need to understand if you want to make money consistently and be profitable, okay? Now, we have people that are part of our Discord community. If you're interested in joining that, it's free, who are making money each and every day. If you don't believe me, you can come over there and watch and become a part of the community as well. All right? So, the strategy is just like this. All it is where find the direction. What's your bias? Determine which way the market is moving. As long as we're making lower lows and lower highs, we're breaking structure consistently to the downside like we have been doing. Look for key pullbacks or just retracements to key areas of supply, okay? And inverse of if we are pushing to the upside and breaking structure higher, all right? Again, all this is supply and demand zone trading or order block zone trading at its best. If we are making lower lows and lower highs, like coming out of yesterday's trading session into today, look, Asian session to London, we were making lower lows and lower highs. You should be able to follow this stuff with your eyes to be able to depict which way to trade. Simply looking every opportunity in which the market pulls back and then breaks structure, like it made a low, lower high, broke structure, pull back, broke low here. Breaking a low here, that's a break of a major area structure right there. So we broke structure there, pull back. Broke more structure as we came down lower, breaking below these lows here. So pullbacks to key areas of supply is what we're looking for when we are short. All right. So if the market then changes its focus or direction, like right here, it pushed up, we made a lower high right here, right? I'm sorry, a higher low right here, not a lower high, but a higher low. The market rejects, pushes higher, breaks above structure right there. So at that point, we were from from moving from a bearish standpoint down to a bullish standpoint. Yes, the market can turn on a dime. We could come back down here and break below this low, and that'd be a major structure point break below 17,919. Or we got a major high resting right here. We can push to the upside, take out 18,493, and break major structure back to the upside. In that case there, we break higher, take out this high here, pull back to a key area of demand to go long from, or an order block zone with this bullish activity to go long. That's all we're doing is taking retracements to key areas of supply or demand when we're trading this strategy, okay? Now, let me show you an example of what I'm talking about here. If long as we're making lower lows and breaking structure lower, like right here, you see we made a low here, pull back, made a lower low, we broke below this area structure right here. There's an area, okay, up in here, which is an area of supply right up in here, right? We're going to move down to a lower base chart because that's what we're looking for, is to be able to find confluence on multiple charts. You know, definitely two charts we'd like to see, correct? And then if you have like where we are approaching like a round number or a half number as well, like on this pullback right here, what do you see over here? 18,650. That is where, these are areas where the market loves to actually reject it, all right? So if you have multiple chart confluence, let's go down to the 60. I'm going to show you an example right quick. Right here, you see how we have a break of structure below here? Well, we actually broke structure on the higher base chart as well. On the lower base chart, the 60 range, I move down. We got a break of structure coming to the downside on the 60 range. Now, if I move down even lower, and this is a high probability zone right here where the magenta line is at. This is a 60 range supply zone, aggressive selling. If you don't know what I'm talking about when I say high probability, low probability, or what makes it high or low, is where it has an imbalance back resting at the actual zone. Okay, so first approach is to mark up, you know, a higher base chart. Okay, it could be the 120, it could be the 60, but then we want to be able to find a lower base supply zone resting on the inside of the higher base markup that we made. That supply zone from the 60 range, say for example here, right? Market pulls back to a key area of supply resting right here on the 60 range. Why? Break a structure. That's the number one thing I have to see when I'm looking for opportunities to trade supply and demand. I must see a structure break to the downside. Now, I move down to my entry chart. See the structure break here, okay? All this does is by scaling down or zooming down to a lower base chart, gets us into more of a precise entry point to where we don't have, you know, as much, I have to worry about as much drawdown. Gets us into where, you know, because the market may hit a higher base chart zone and they can kind of push a little higher, okay? Not saying it's taking out the zone, but push a little higher up. So where you may be looking to take a trade the moment it hits the actual zone, it could break deeper into the actual zone or move higher up into the zone, and then you may get stopped out, all right? So we're looking for reaction once the market taps into two zones. The higher base markup, which is the one we marked it after we had the break of structure on the higher base chart, or whatever chart you're using as your higher base chart. It could be the 120, it could be the 60, but you need to find and scale down to a lower base chart to take your trade from. Now, in this case here, I'm taking this off the 24, for example, right here, right? So if the market pulls back to the magenta box, which is, or outline box, which is the 60 range supply zone, I'm going to find a zone on my lower base entry chart that is on the inside of this larger zone, okay? So it retraces and hits or taps into the 60 range supply zone, taps into now the 24 range supply zone that I found on the inside of the zone here, and we are at a, let's see here, make sure 100%. What did I say? And I'm sorry, guys. I was looking at this zone over here on the 24 range and the 60. That's another zone. I'm gonna show you right quick. One I was just talking about on the 24. That's the incorrect zone. Let's move down. Let's move over to where I was talking about on the 60 range. It's this zone right here at the 650 area. So it taps the 18,650 area. Okay, and the 60 range, you know, supply zone we have here. So we're just looking for the tap up here, right around this supply zone here on the inside of the 60 range chart. So I'm sorry about that. This is the zone markup, which happened around 10:16, 10:17, right here on the 60 range. And then on the 24 range, it was right here, right, 10:16, okay? I was showing you another zone that I had marked up over here that happened a little bit later, I think around about 11. Where was it at? Maybe a little bit later than 11. Let's see. right at 12 o'clock. Okay. So I don't know if I had that marked up on the, let's see. Yeah. Right here. I'm sorry. This one over here. This is the one I'm not talking about. I meant to, the 60, I had it correct, but on the 24, I showed you the wrong thing. Sorry about that. But anyways, it's the same thing. Same approach, higher base zone markup, lower base zone markup on the inside of the higher base zone. And in this case here, we also have confluence. Let me go back to it. I'm still at this other one here at 1016 right here at pretty much the 650 area. So half number and round numbers, again, is our areas where the market likes to react at. So if you get into the trade right here, okay, once the market taps into the 24, then you could basically take the trade on down here to fill these gaps. This is a swing to the upside where the market broke structure to come back down, because this would be a demand area. We could look for opportunities to take the trade going back down to fill the gaps back to the downside where we have this actual zone at right here, and the market it goes down. So you can get an aggressive here at 660. Okay, say for example, and take it on down here to 634. All right, and pick yourself up some nice points right there. All right, 20 plus points. So again, as I'm talking about, all you need is like 20 points on the NASDAQ a day, and you could do fairly well by picking up $500 each and every day and make that $2,500 a week. All right, simple strategy, guys. Multi-chart confluence. All right, here's the other example that I was talking about a short while ago. This is a supply zone off of the 60 range chart here. You see I marked it up right there. High probability. We move down to the lower base chart. I'll show it to you right quick. Let's move over to it. Right here. Okay, we got what? I always say, I got to see a break of structure, right? Broke below this low right here at 303 or 304. Okay, move down to the lower base chart to find a smaller zone, which is a supply zone resting on the inside of our 60 range zone, right? Say for example here, sometimes I'll mark it up. If I can find a 120 range zone off of my highest base chart, then I'll move down to like a 24 if there's a zone that makes sense for me to trade from, or one I can find on the inside of the 120. This case here, I was using the 60 and the 24 range. Okay, high probability on the 24 ranges as well. Market taps into it. Look here, always say follow price action as the market taps into the zone. It tapped the 60 range zone. It tapped the 24 range zone, and look at all these gaps that they become filled to the downside. This is a demand area right here off of this swing, pushing back to the down. Pushing back to the upside as it's retracing to our zones. Rejection, you can get in here at 326. The market comes down and fill right here to this demand zone, resting right here at 293, 294. Again, this is what I do each and every day. Just being able to follow structure and determining which way to trade is the cornerstone. Okay, that is the center of everything. Once you figure that out, then if we are bullish and we're trending to the upside breaking structure, only be looking for demand setups, and vice versa if we're moving to the downside. All right. Now, again, if you're interested in becoming an elite channel supporter to where you get access to all the trade breakdown videos, that's a private community. It's only $6.99. You also get the video playlist and a great video that I cover surrounding market structure for anybody struggling with that concept. Trust me when I say this, those trade breakdown videos, they are the meat and potatoes to everything. They're the substance that actually ties, the strategy that I talk about together, because I'll walk you through setup after setup and video after video, breaking these trades down that I post over on our Discord. The trade that I posted on the Discord today, again, I'll be breaking that down for the elite channel supporters. You guys will see that post sometime today later on. So if you're interested, the link is down below. Once you click the link where it says elite channel supporter or elite channel member, make sure to choose the second tier for $6.99 a month, and that's going to give you direct access to all the additional video content. Now, if you want to become a Discord member, the link is down below. It's free to join us as well. If you're not a current subscriber, please, I don't know what you're waiting for. Take the time to go ahead and click on that subscribe button right now. Make sure to turn your post notifications on so you do not miss any other uploaded content that I pretty much post on a daily basis. It is my goal, and the reason why I make these videos is to inspire other future traders out there who are interested in trading, one of the markets like the indices, like the NASDAQ or the S&P 500, gold, I don't know, maybe financials like the bond markets. Whatever it is that you want to trade, the same strategy works across so many markets, okay? Doesn't even matter if you trade Forex or trade options or whatever it is you have interest in, the strategy is universal, okay? Outside of that, guys, that's all I have. I appreciate you taking the time to watch the video content. Make sure to subscribe. And last but not least, if you could do me the biggest favor, if you found value in today's video, drop a like by clicking that like button, that thumbs up button for me. Take care. See you in the next one.